Hi, Kory. Welcome to our Adapt and Thrive episode. Thank you for making time today.
No problem, Dahlia. Thanks for having me.
How are things on your end these days with the environment we're in with the investors? What are you hearing from investors?
Yeah, I think things are good. I mean, we're hearing lots of different things. I mean, there's people that proclaim to know what what the future is going to hold, and I always tell them, like, I guess your crystal ball works better than mine that I bought at Walmart. But I think investors should always be preparing for higher rates, right? When people only budget their cash flow analysis on current rates, which money, as you know, has been super cheap for a couple of years now. That's just poor planning by all means. So we can definitely looking forward to digging into it more here with you today.
Yes, same here. To start, Kory, would love to hear a little bit about your experience here with our audience. So why don't you share with us a little bit about your investment journey and what you do as an investor?
Sure. So I started investing back in '03 is when I started, and I didn't even buy my first property until '05 because I took the slow route and I just wanted to learn and pick away. But it was a lot harder to find mentors and information back then. I don't even think YouTube was a thing back then, so I was literally using the white pages and everything else. But basically a BRRRR investor, done a lot of BRRRRs, dozens and dozens of them over the years, and I've also pivoted to all kinds of other strategies, conversions, land development, flips, wholesales, hotels, you name it, short-term rental, rent to own. But I always recommend that people master one thing first. And was able to retire from corporate back in 2013 with real estate investing after 6-7 years. And ever since then, I've grown a very big coaching, following. We're probably one of the biggest coaching companies here in Canada when it comes to people that want to, get a coach or mentorship when it comes to getting the playbook for this sort of stuff. So I also just did a YouTube video on a lot of these things here too. So I'm happy to dig in. I've already done the prep work, so I can definitely help share that playbook with you guys here too and share my thoughts. So
Yeah, that'll be fantastic. That'll be fantastic. Okay, Kory, with the rise in interest rates right now, some investors are seeing an erosion to their cash flow. As a veteran investor yourself, who holds a large portfolio by now, and you've invested in several strategies, as you've mentioned, what are some of the strategies you are currently deploying for your existing portfolio to address the impact on cash flow?
Definitely. Well, one of my very first mentors I've had many of them before in the past. I mean, they always say, make sure that you have reserves. Okay. And that doesn't just mean in your own financial life, but it's also in relationships and with your physical body and stuff like that. Like, when do things break down? When there's like there's no reserves, right? So make sure that you're always budgeting to, or you're getting into properties and deals that have ample cash flow. So that's number one. Make sure that they're cash flowing really well. Buying a condo in downtown Toronto probably isn't the best thing for cash flow these days, right? They meant to go to smaller towns, more value cities. So that's the first one. Second one is, if you can be patient and pay that mortgage down and just keep some of the equity in there where you're not always topping right up to like 80%, 85%, 90%, like if you're house hacking or whatever, if you're trying to get higher loan to value, make sure that that's not necessarily always the case. And you can always pivot to, let's say, even if it's a duplex or a triplex or a fourplex, I'm recommending that people like, hey, rents are going up. So if you can refresh your rents, get a vacant unit, refresh it and reset it at higher market rents. Like it's crazy what rents are doing these days.
Yeah.
I was literally just on a phone call with my student who's up in Sudbury. He just finished a duplex conversion, and he was originally thinking he was going to rent out both units for about $3,500 a month, so $1,700 each. He's getting $4,500 a month right now.
Oh,
just because if people can't afford homes, rent's gone up by 15-20% as well. So that's in people's favor, sometimes 30% in some markets if your product's really good. But you can always try to short-term rent some of the units. Like, I'm not saying all of a sudden turn into an Airbnb hostess or host, but it'd be amazing what you can do, even if you just provide like beds, desks, dressers for students, right? So they can just show up. They'll pay more per month for that, and frankly, it's probably their parents paying for that. We do a lot of medium-term rentals. So for people that want to rent for 1 month or more, we'll furnish the units, and they work out really well that way. So we typically get 50 to 100% more rent per month for that. And then I'm not having to deal with all the messaging and all the constant turnover, because you think about what kind of business are you really in when you're doing Airbnb? you're really in the messaging business, you're in the hospitality business, and you're in the customer service business. So I like to kind of pick that sweet spot where I can send a cleaner in once a month, and we're getting more rent. And we spent $5,000-$10,000 in furniture that we recouped that in the first 6 months anyway. So.
Okay, so you're really finding opportunities to increase the rent, and you want to always make sure that there are reserves in periods like this, is what I'm hearing.
Yeah, make sure, like, don't be afraid to negotiate on any deals that people are taking down now, right? So if sellers are thinking they can still get prices from February, March, April, like, they're delusional. And I mean, a lot of people I know aren't afraid to go and put offers in, right? If duplex was selling at 500,000, don't be afraid to put offers in closer to 400,000, because that's realistically how much the market has dropped in a lot of cities, and that's really what this duplex is worth now. So if you can get a vacant duplex at that price and you can maximize the rents, I still think that there's great deals out there.
Okay, so that takes me actually to the next question. It doesn't sound like you or your students are sitting on the sidelines right now waiting to see if the prices would drop further. It sounds to me like you're still out shopping and negotiating better deals. Is that correct?
Yeah, fortunately, Dahlia, like, there's more inventory on the MLS, right? So there's more things to go and look at now, and there's more listings that might potentially getting stale or being on the market for 30, 45, 60 days now. So it's definitely easier to go out there and find those opportunities, and just really play the real estate is a contact sport, as you know, right? You're on the phone and you're on Zoom calls and things all the time, every hour of the day, waking hour of the day. So make sure that people are taking full advantage of that, and don't just be sitting on the sidelines, because yes, prices will, eventually we're going to go like this, right? There's going to be a U-shaped recovery, but until that happens, like, you can always force that trend to happen anyways, just by finding out who the more motivated sellers are, the ones that really need an offer. And, it's not just like price is only one part of an offer, right? It's like, how can we make this a deal? How can we get a little bit creative with this, where we can both work together and make sure that both sides get what they want, or maybe meet in the middle to get a sale happening.
Okay. Are you doing anything differently with respect to evaluating the deals or running the math these days?
We're definitely making sure that people have that longer term horizon. Like, don't just look at this property in a 1-year snapshot. Let's go look at it in a 3 to 5 year, ideally a 5-year term. And, if you're going to average out your cost of borrowing over 5 years, like, hey, maybe you should be using 4.5 to 5.5%. To me, that seems realistic, a good average. And then when you do that pro forma, or that, play it out over 5 years, I think it's really cool when people actually start to see that, cash flow is just one part of real estate investing. Like, cash flow is great. I definitely don't recommend getting into properties that are cash flow negative. However, some people's properties might be cash flow negative right now, but you also got to look into mortgage pay down, which is a big part of that. Eventually they will start appreciating again. It's not like we're going to be flat market or down market forever. When I first started investing, I'm sure when you first started getting into mortgages, I mean, we were happy to see between 1% and 3% appreciation, right? This has been absolutely bonkers, for the past 2.5 years. Never seen anything like this before, but it can't last forever. So now we're just getting a correction, and markets do go down and up, but eventually they keep going up and to the right? So I know I just gave a whole bunch of different contexts there. So
no, you touched on some very great points there. Thank you for that. Let me ask you this: do you see this market that's ahead of us as an opportunity or a risk to investors? And what would you recommend to investors to, depending on how you see it, to prepare for the opportunity and to manage the risk?
Yeah, that's a great question. I was looking forward to answering this one. So I think depending on the person that would be looking at that question, it's going to be depends, right? So for some people, it might be a risk, right? For people that were more speculative, just throwing money into whatever investment kind of crossed their desk, or they thought, like, a condo pre-construction was a great idea, and then they see how long the delays are and all that sort of stuff, and now the prices, they basically bought into a falling knife. I think it's, on the other hand, for someone who knows what they're doing, there's great opportunities out there, because they're not afraid to go and put the offers in, and they have the capacity to wait things out for a year or two. I think we're already into a technical recession right now, and it could be messy for another, let's call it 2 to 3 years. But for people that have that longer term vision, I definitely recommend having a longer term vision. Like, we'll get through this on the other side. Like, housing in Canada is still underbuilt. We don't have enough supply. So it is impacting rents. Rents are going up. And until all that stuff gets solved, it's not like nobody's coming to Canada. We still have immigration. Immigration is still increasing. So I'm a big believer, as I'm sure you are, in real estate. It's a great sector, and I'd like people to prove us wrong. So
Yeah, I'm with you 100%. That's the last question. What is the most important thing investors should be doing right now, in your view?
I feel there is, I'm going to mirror a couple, or I'm going to match up a couple things here. So I think people have to practice patience with taking action. And, the important thing about that there, Dahlia, is, when it comes down to the most important thing that people need to do is, like, if you're only going to be sitting on the sidelines, you're going to miss some great opportunities. And, taking action is so important. But making sure that you're informed and you're literally talking to as many people as you can every single day. I mean, be in touch with your realtors, be in touch with your mortgage brokers, be in touch with other real estate investors to find out what they're doing, what they're seeing. Even like people like home inspectors. Hey, are home inspectors busy these days? Which would mean people are putting offers in with conditions versus a lot of home inspectors weren't very busy the past couple of years because of all these firm offers, right? So
Yeah, we're seeing conditions again.
Exactly. So just really staying in touch with and be a student of real estate. Like this is just a great time to go all in on it. Don't just dabble. If you're really serious about this, commit to it and get a plan together, get some mentorship, get great people in your power team like yourself here so that you actually have a playbook and you know how to move forward.
Yeah, I love that, Kory. Be a student of real estate and consult with your advisors and learn from those who have seen things and are able to navigate and are sticking with the fundamentals and know how to plan. That's really where investors, the investors who utilize that in this environment will shine in the environment ahead, in my view. So yes, mentorship, leaning on your advisors, planning and continuing to take action, informed action is I guess the key word that I'm looking for here, informed action. Yeah.
I have one more tip for people. This is what I was trying to think about as my all these thoughts were coming through my mind here, but make sure that you're falling in love with the numbers of the deal that you're looking at, or the potential numbers, or how you can make it into a deal. And don't get too emotional about it. Even earlier on in my career, I almost talked myself out of some really good deals because I was thinking too much emotionally, or what could happen, this could happen. But when you actually have a checklist of like, hey, it meets the area, it meets the neighborhood, it's got a good layout inside, like it's kind of like an evergreen property. This is one that I want to hand down to my kids. It's in a, it's not like I'm waiting for the area to gentrify. This area is solid. So if we ever do have another zombie apocalypse or another, who knows, pandemic in the world, this is where people are going to want to rent, right? So fall in love with fall in love with with the numbers, and don't get too emotional about the deal itself, right? Because you can easily talk yourself out of like a really good thing just from like some sort of bias or some other person in your network saying like, oh, that's crazy why you're investing in real estate right now, right? So if you have a checklist of all the things that it must have, including parking, good construction, not too many capex improvements that it needs over the short period of time, just put in the offer, and it'll reward you over time.
Fantastic. Lastly, where can we find a copy of your real estate playbook?
I'm actually making an evergreen webinar. So if people want to get the link for it, they can just reach out to me, Kory at korymackinnon.com, or they can go on my website. We can book a quick call. I'm pretty easy to find, got a YouTube channel, got a website as well. Just look me up online and we can connect, and I can get you the playbook for all these different points.
Fantastic. Kory, thank you so much for sharing your insights and tips today. We really appreciate it.
No problem, Dahlia. I want to be a bright light to other people here. I think it's important that it's not just all doom and gloom, but hey, for the people that want to dabble, the dabblers have kind of gone away, and the serious people are here to more take advantage and take down all these deals, right? So
100%. Okay, fantastic. Thank you very much.
Guys, we'll see you on the next one.
Take care.